Good evening. I'm Epstein with your metal market wrap-up, and this wrap-up is for the evening of Monday. And we're at the 26th of February, 2024, 5:50 p.m. Central Time. I'm in Chicago. People are in shorts, flip-flops, T-shirts, 70 degrees or so today. Parks are full, running fields are full. You would not know it's February 26th. There is just no chance. So when you say climate change, weather warming, and so on, whoa, I don't recall this. It was definitely, I believe it hit a record in Chicago. So we'll see. We're due to be warm tomorrow, but I don't think we'll hit the record. Record is 76, I think, for tomorrow, but we'll probably get in the low 70s, and then we'll dive again. But you're just seeing, this is one of the mildest winters I ever recall. We had one real cold week, and that was about it. Talk about cold. So the stock market, it didn't get cold, but it seems to be in a consolidation. I'm going to talk about that in the financial wrap-up in a few minutes after this. In the gold market, it is fighting. It is fighting well. It's trying to establish an uptrend here. The silver market has lost a lot of ground to the gold just recently. Copper's pulled back, actually closer to 380 overall. Got a little bit of a bounce from here. Platinum market was a failure today, actually turned the trend down. And you have a mixed bag in the currency markets. They're back and forth right here as the dollar's down a little and they are trying to rally ever so small. But remember, we have all kinds of reports this week. You got the PCE index. You're going to have a big fight on your hands if parts of the government are going to shut down come Friday. So far, there's no agreement in Congress. President Biden has called everybody in, the heads of the House, the head of the Senate. They'll bring in their number two people, and they'll sit down together and see if they can work out a deal, but who knows where that's going. In the energy market, a really important bounce happened today against key 18-day average of closes. It was fairly impressive. Bonds and notes sort of stable at this point. Now, before we go to the chart, and here's where we're at, and I'll come to you with this in just a minute here, why don't we take a look at the reports due out? We have durable goods orders. They're going to come out at 7:30. The Red Book Group sales, that's weekly sales, will be out tomorrow at 7:55. Case-Shiller 20 Metro home prices will come out at 8. The Richmond Fed, they're going to update their monthly manufacturing sector Tuesday at 9. We get the Conference Board U.S. Consumer Confidence coming out at 9, API numbers. We get the first revision, I think it's Wednesday, of the GDP number. We get jobless claims coming out, the PCE indices coming out. There's a whole lot of information this week. That is the point that I'm making. All right. So as we come back to the gold market, you can see the battle on the weekly chart is shaped up just where I thought it might, which is on a closing basis, the 2023.90 level, which is the 18-week moving average of closes, but that's a weekly chart of just closes. When you look at the daily, you can almost see that the market from this peak dropped and came back about halfway, and it's just sort of sitting in between the two areas right there. The pattern is bullish in that you have higher lows and higher highs. So until you take out this low over here, which was Friday's low, I'm of the opinion that the market is fighting for upward trend against the 18-day average of 2037.50. You don't want to see 2025.40 taken out. If it is, it doesn't start a downtrend. It just wipes out the chance of an uptrend at this point in time. Should the market be successful and try to lift up from here, well, 2070, the Bollinger top, is one of the resistance areas. And momentum, when you look at it, you're not in overbought territory. So this market, trying to find its support between the 100-day average in green of 2031.90, the 18-day average of 2037.5. In the April gold versus March silver, now, I don't think you should be trading March at this point, but because it trades for quite a while, when I'm looking at the area close, or a chart of close differences or ratios, if you will, I like it right there. I divide one by the other. And as long as you're going up, it tells me that what? The gold market's stronger than the silver. Should have that colored in gold, by the way. That's what I told you I would do. I missed that. In the May silver, lower and low, higher high. But here's what you've really done. You've gone from the lower Bollinger Band, challenged the 100-day average and the Bollinger top, got thrown back. You're in the middle of no man's land. And even this rally wasn't an uptrend rally. You had a lower and low and a higher high along the way. So you have a lot of sideways action trying to determine what the next trend is going to be. If it breaks down from here, well, 20 level could be a zone that you go to. If it can break out through the upside, you got to get through the $24 level in order to have any real hope that you can go anywhere to the upside. The market has been stymied at that number for a very long time. In the copper, I've been looking for this pullback. I mentioned it to you last week. This is when the Chinese came back from their lunar holiday. They drove the market up most of the week. Then you saw some profit taking. I look for a lot of support between 381, 380.60 and the 379.5 level. That is the 100, the 200, and the 18-day moving average of closes, but you are overbought. I don't think the pros are reaching for anything. And in the platinum market, should it continue down, look for support at 870, 290. But this was a big failure on this market. This chart got very ugly very fast. And your Bollinger Band and your 100-day average are going to be problems for this market on rally attempts. When we look at the dollar index, it is trading in between and has been now for several days. The 18-day average of closes, the 100. The trek has been to the downside. Should it break hard, it could get to the 103.24, 103.08 area. And if the market's good, whatever that might mean to you, then what I'm looking for from this point is the market to get back over 103.97, close over that level, the 104 area actually, and that would get me excited about the upside again, looking for the possibility of 104.80. Do I think the market's capable now of the 106 area? I'm questioning it. At first I thought when you were having this rally it might happen. I'm now wondering, have we run out of steam on the upside at this point in time? There's a lot to be determined. We have jobs reports, CPIs, PPIs. You get PMIs on Friday that you're going to get in the, I think it's in the manufacturing sector from S&P. Got a lot of data that we've got to go through, and we will see, was this January, February timeframe just an anomaly, or is it telling us a different story that the inflation story and so on is still baked in? I can't tell. The data's too rough to tell. We'll have an idea as we look at more data. But one of the things you should do is, like I do, I look at Bollinger Bands all the time. And the reason is, so often they make your top or bottom areas. They're important to the zones in the market. You can see it just so clear often. And how do you do this? How do you play with them? You don't just put them on your chart. Number one, it's how you play them with momentum. Do you come out when you're there? Do you hold on to them because the pullback might be just that, a pullback when you're going to come up again? And where does momentum fit in with that? I teach it in the course. All you do to find that out is you go to the education area of our website. You can click up here. You can go to iraepstein.com. At any point, you can watch this ad that comes up next. Remember, just move your cursor to the top there. It'll take you right to the course area. I'm Ira. You have yourself a good evening. I'll see you in the other videos tonight. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.